Yes, sir. What's going on, everybody? It is now 4:15 Eastern Standard Time here in New York City, December 27th, 2023. Happy holidays, Merry Christmas, Happy Hanukkah, Happy Kwanzaa. This is the last week of 2023. It should be a little, I think it's going to be a little interesting because if you have invested at any point in time in 2023, you're up right now. And it seems like the markets, everyone's waiting to sell. If you close your positions after January 1st, that counts towards 2024, and you don't have to worry about taxes till 2025. So it makes a lot of sense that it's being I shouldn't say propped up, but people are holding their positions. But then again, if you have this overwhelming sense that there's going to be a sell-off, you want to be the first in line for that sell-off, right? So I think that there's going to be some people that don't want to hold on to their positions, and they're going to want to try and get the best price, and they don't want to come back in January and try and, you want to sell into strength. Obviously, that's like one of the first rules. What's up, Mike? What's going on, brother? Merry Christmas to you. So, just sorry if I apologize in advance if I start coughing or sneezing during all this, and but I've been sick lately, but I'm doing a lot better. So, really, what we wanted to talk about today, there was a couple of people that I've met recently that are getting into the Quant Trading App, which is something I came across this year about 7 months ago, and it's just been life-changing for me. And I can't imagine trading a day without it, but don't take my word for it. Let's take a look at it. So there was a couple. What's up, Mr. Webb and Jeff in the house? You got it, Jeff. Anytime. Well, not anytime. But anytime, you know what I'm talking about. Stop talking, Doc. Anyway. So what we're going to do is just kind of like a quick demo or tutorial, or maybe like an onboarding, right? Just of what it offers, what you can look forward to, how to use certain tools. And I guarantee you that you'll never be able to digest everything there is, right? Because there's constantly, Bryant, the creator, is constantly improving and adding more with the developer team. They're including more data, which is close to an amazing feat as it is. And if you're into data, this is the tool for you. If you're not into data, but you want to get the benefits from it, like me, I'm a visual person. I like charts and graphs and lines and colors and crayons and things like that. It visualizes it for you. Essentially, so that's just really what it is. This is the dashboard that you get on Quant Trading App, right? So first of all, the link, if you want to get it, that'd be good, Doug. I've noticed that while I've been sick on all these cold meds, that I've been talking to myself more than usual, and it's a little scary. So, but anyway, here we go. So now you can't see that. Okay, great. Let's get that. Get it. So just so I have an idea, how many people are new to QTA or current members of QTA? I guess that's it. How many people are members? Type the number 1 in chat if you're a member. How about that? I learned that from someone to help. That way I can just get an idea of where we are. And then I guess number 2, if you're not a member but you're just here to hang out, that's cool. That's cool too. We'll be talking markets. We'll be talking all that good stuff. But this is the dashboard where we sign on. This is the first thing you see. Obviously, you have the sectors, which is a good way to start your day. You see what sectors, if you're into that, into that sort of thing. That's great. And then you have the top stocks right here. This is where you live. When I first joined, this is where I lived. All the ones that I invest, all the mega caps, all the large ones, they live right here. You have everything here. So let's say Disney. You want to take a look at Disney. You have the chart right here. But first I want to talk about the open, high, low, close table. This to me is the basis of all data that lives inside QTA. And when I talk about data, you know, you have Disney here, and just to see how far back it goes, you have data going all the way back to 2018. Now, obviously, before 2020, before the pandemic, you're going to have certain anomalies. Well, in 2020, you're going to have the anomalies that took place, and before that, it's almost like different data altogether. So keep that in mind when you're doing back testing. What are you back testing for? By the way, these are by the weeks of the year, right? And we should be up to now 51 weeks, and then it lets you know certain, you know, outliers, right? Like the 2 sigma resistance, which we'll get into. But once you see that hit, that's an indication or a signal that you should expect a reverse direction, right? And we'll get into that when we get into the charts. But just so you know, this is where your data people want to live. You know, you can toggle through data, and you can see where, you know, each individual day, everything is clickable, and you could just spend a ton of time in there and getting used to it. I don't want to blow up your minds just yet, but this is what I was talking about when you hit those signals, right? This is the quant trading chart. So this is Disney, and this is on this is February 22nd. Okay, I closed. Oh, because I clicked on that week. Gotcha. So let's just go, and there you go. So we can always back test a whole bunch of things. And that's when I first joined and I got access to QTA. That's what I did. I instantly started back testing things. And I remember vividly a trade, and I'm sure you guys all do also. I had a trade on Tesla earnings in April 2022, and I went and back tested that to see if I would have made any different choices on that trade. I had a winning trade. It was 2-part. It was a buying shares during the earnings and then selling a credit call spread on the day after, and then see how it was. But anyway, you can back test it yourself. So Disney, let's stick with this particular day, right? So this particular day on February 22nd, 2023, we reached down to this zone here, this green zone. Now, these 3 areas that we see here, these 3 areas, well, you can't really see this one. Let's start with the green zone. This is the buy zone, right? Obviously, it's called the buy zone. So once you reach it, you don't. It's not necessarily like go. This is 100% go. Buy here, buy here. You want to use confirmations of anything, but just by looking at this chart alone, I see a double bounce on the buy zone. Now, in between there, so you can see these 2 gray bars. If I zoom out, maybe it's a little easier. There's one here and one here. These are the intraday levels, right? So each day down here, they're going to be updated. This is the intraday level. This is the 2-day VWAP, this big thick line here. Now, I'm contesting that this tool alone, you can trade just off of this particular tool. This 2-day VWAP, unlike the regular VWAP, which uses the daily volume, my handle, oh, hey, what's up? DeFi's in the house. New member here. So unlike the daily VWAP, which uses the day's volume, right? The 2-day VWAP uses volume from the day and the one prior. And it sounds simple enough, but when the amount of respect that the price action has against it, and you can see right here, comes up, it respects it again, and notice the action it takes after it touches it. And that's important to know, because on a second touch here, we have 1 touch here. This one didn't quite make it. The second touched, look at that. And the next day, it comes back down, and it goes to the next level. And that is the basis of this chart right here. It's just levels, and once, you know, it just treated it like a support and resistance level. When it gets to that level, if it rejects, you're going to look at the level below. If it breaks, you want to look for a break, a retest, and then look for the level above. So look, knowing just that basis, you can trade using that, right? So we back tested it, came racing down to the next level. Now we have a double touch on this buy zone, and to me, without even looking at other confirmations, right, I'm signaling my head that, okay, this should go up more than not. Now, I'm just going to take a risk here, and it'd be really, really sad if it doesn't go through, but we're going to just go to the next day and see what happens on the 23rd, or if it's a Friday, maybe the 25th. So on the 23rd, we're down still in the green zone. Okay, so we didn't bounce off as we said, but we should have checked more data. But here we go. We broke through now. The 2-day VWAP is now adjusted. So the 2-day VWAP, we broke above it, and we're coming back to test it. And let's just go forward in time. This is all improvisation. So this is not a planned test. So here we go. We're still below the 2-day VWAP. And I'm going to show you how to use confirmations so it's not just to go on one single signal. Try saying that a lot. So that was the Friday. Now we're on the Monday, and we have a new set of data. So you see how the intraday now changes. We're within the intraday, so this is a range day above the 2-day VWAP now. And we're just going to go, I'm going to find an actual move, and then we're going to use that to confirm with other things. This probably should have been researched before. Sorry about that. Now we're on the 28th, and we're going to go into March here. Okay, we're still below the 2-day VWAP. Terrible, 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 Doc. But the idea is that you want to first get signals from one area. So on the Quant Trading App, on the Quant Trading chart, we'll see that it's hovering around this intraday. To use this date would be a little hard. We have to go back and search. So let's just get to the, the more closer date. How about today? And you know what? Let's go to let's do something more exciting, like Tesla. Everyone likes Tesla, or everyone hates or has a love-hate for Tesla. That's for sure. And Tesla moves, so Tesla is always a really good showing. So here we have, this is the last 3 days or so of the Monday, Tuesday, now Wednesday, and we're in this area now. Where I'm looking for Tesla, I would be kind of looking towards the south side, because we've touched now the sell zone, which is the opposite of the buy zone. Sorry, in between is the midpoint. The midpoint, when I first started, I was kind of, just brushing it aside. It's just like another dotted line. But this has a lot more respect than what at least I thought initially. So don't sleep on the midpoint. But now let's look at the GEX, right? This is what we came here for. This is what we came here. So easily to access Tesla GEX, we'll go into the Discord, and once you become a gold member, you'll have access to all this extra data here. And on the side, we have the options data feeds. It says the SPY, the SPX, the Qs, also the weeklies and next week's. But we're going to focus just now on Tesla for right now, and we'll get into SPY and Qs because they have extra set of data. They have 0 DTEs, and they also have an oval chart, which we'll get into. So based on, let's back up for today, right? Or was it DeFi I was talking about? I had there was the Qs, right? The Qs, right? We were talking about the Qs and how to trade the Qs. So again, I'm sorry, I'm on cold medicine. I just want to stay focused. So let's go with the Qs. We're going to use the Qs perfectly because there's such more data, and there will be a good way to use Confluence on everything like that. So the beginning of the day, what you do is I look at where the, let's see, the beginning of the day. This is, let's go up to 9:30, right? So 9:15 is the first. This is a feed that comes every 15 minutes on the Qs, the SPY, the SPX, the Russell, Apple, Amazon, Microsoft, NVIDIA, and I think I missed one. No, Apple, right. So I like to use as much data as I can, and people always say, for a long time when I was hosting and when I was teaching, I'm still teaching, they always ask, well, how many like data points do you need before you're comfortable making a trade? And I said, as many as it takes. Like, you want to check as many data points as it takes to make you feel 100% confident in that trade. And then people, well, there's nothing, you can't be 100% sure of a trade. And the trade isn't going to be 100%, but you want to have that 100% confidence. You don't want to go into a trade saying, I really hope the Qs get to 415 tomorrow because I have a 414 call on it. You don't want to hope. This isn't, you're not betting on the Giants and the Jets on Sunday football for the fun of it, right? You're investing, right? So if you don't have 100% confidence in a trade, pass. The market's always open, except on holidays, Saturdays and Sundays. But you're always going to have another shot. So wait for your pitch. You're going to have infinite pitches. Wait for it. So in the morning, I'm going to look for confluence. And what is confluence? It's literally, definition is two rivers coming together to form one. So you want to see where some lines meet up. And what those lines that we're talking about is the absolute GEX and the max pain. Absolute GEX, in the most basic terms, what we have to understand it here, is it's an attraction as well as a bit of a support and resistance. The max pain is, I'm sure you guys are familiar with the theory of max pain. It's the point where the calls and puts have the lowest of intrinsic value, right? And a lot of people think, well, that's where the market makers want to put it, so everyone loses money. You know, the market makers are evil. All they want to do is take money from us, which not really true. You know, people take for granted the fact that if you want to close a position, you can literally pick up the phone and a market maker will answer that call. You might not get the exact price you want, but you're going to get in the vicinity to have liquidity. The vicinity for liquidity is pretty nifty and swifty. But the idea is that the market makers are there to create a liquid market so that you're not holding something of unfair value. That's why when you take a look at an options chain and you'll see you'll see just something that has no liquidity to it, you kind of pass on it, right? Taking calls and puts in Victoria's Secret, you're not going to have the same liquidity if you're taking calls and puts and doing spreads on Tesla, right? By that same token, you don't want so people sometimes ask, well, I'm investing in Smart for Life stock, whatever, SMLFL. What is some GEX information on that? Well, the answer is there is no GEX for that because there's not enough data, right? First of all, you need to have an options chain. You need to have an options market, a derivative market there in order to develop and create the gamma exposure to have this data. So the more liquid a stock is, the better GEX data we have. So when you look at Qs and SPYs and things like Tesla and Apple, there's a lot of liquidity there, so you get a lot of data. There are a lot of things you can look up inside the QTA universe that will have GEX data, but it won't be the same level as something like Apple. So I might be jumping ahead. Let's just stay focused here. What we're looking for is the confluence of those two things, the absolute GEX and the max pain. When these two occupy the same space and also in one of the high GEX bars, so just real quick, the GEX bars, the green here is the positive GEX, and the navy represents the negative GEX. When the navy bars turn bright red, well, I shouldn't say bright red, just turn red. There's two colors, navy and red. There's not a subtle red and a bright red. When these turn red, that means the overall GEX is net negative, right? Net negative GEX means higher volatility. So you should expect more movement. And there's a member, Zeitgeist, who reminds people that use the GEX charts. He's a member, by the way, that's what I'm bringing him up. He reminds everyone, don't use the GEX charts specifically to, match the movement of the price, but use it to measure volatility, right, primarily. And that's a really good point, because just because we have this high bar here, it doesn't mean that the price action, which is the spot, this yellow line, should be gravitating toward it. It does, because that's the way the market makers try to keep liquidity moving, but there's other factors that go into it. So using these three things, the absolute GEX, the max pain, and the high GEX bar, when these three get together and they convolute, whatever you want to say, that is a signal for that's where price action is going to gravitate toward the most. So now see this during the feed, it flashes over to red. So for this 15-minute interval, we had net negative GEX. And let's see if we have a confluence today on Tesla. On the Qs, we did not. But for the day, I think I posted something using the Qs. And I think it'd be easier. No, I don't want to pull up private message. Let's just take a look in Gold Chat. And by the way, Gold Chat is a gold mine for information. There's so many. There's people here that are regulars that constantly. BK Brown, she's amazing. If you're into futures, she's your girl. I mean, she'll post things and spreadsheets and her own, data, and I mean, it's just endless. So this is a whole nother area to get into. But let's just stay focused on what we're talking about here. So this is what I posted at just in the middle of the day. So we have, this is the 0 DTE. This is the daily GEX, right? The daily GEX shows a confluence down here at 409. And this purple line is the absolute gex that we're talking about. So that's an attraction, a magnet, right? Then we have this high gex here, which is over like 22,000. So that's the highest, that's the highest strike and absolute gex. So that is confluence at 409. Then when you confirm that or hold that up to or overlay, if you will, with the weekly tells something of a different story because there's more data, right? There's a bigger sample size, and there's more calls, there's more puts, there's more open interest, there's just more. So now we have all this extra business here. Now that one little confluence strike isn't looking like the big fish in the pond anymore, right? So now we have high gex over here up to 30,000, over 30,000, 3 of them at 412, 414, and 415 and 4. So maybe say even 4 high ones, right? So now how do you play this, right? What I was suggesting is that we're going to see a little bit of a pull down towards the 409, and also, you're always using traditional charts. This is the Qs, traditional charts to kind of make sure that everything kind of lines up. And you can also flip back to the quant charts to do it. So one thing at a time, we'll see, based on this information alone, you can expect an attraction towards the 409. Doesn't have to reach it so much because information can change. And then throughout the week, in my personal theory, using this data, I would expect a more of attraction to these 1, 2, 3, 4 high gex strikes. So how do I play this? Based on the 0 DTE, this is the more localized. We should have a local move to the downside, but a more broad stroke would be to the upside for the week. So I had 410.78 because it's OPEX coming up, so all the all the strikes are wacky, whatever. So it was 410.78 put, and as we got down to close to it, I go back to the charts. We're not going to go all the way back down to 409 because we have this nice little trend line that we've been respecting. And this is when I put it out around here. I think it was 1249, somewhere around here. So we dipped back down. I dumped the put because we struggled around here, and I kept the calls for the week. Will it come through? I'm not sure. The last half hour of trading, I just turned my back because I had my calls in place. I wasn't worried, that it could go the other way. I'm not saying it's not going to go the other way, but that's where my confidence is. And I place my trades as with money I'm already saying goodbye to. The put, I've made money on the put, so I'm okay. And now this gives me a little more relaxation, like a little more confidence, and I'm not having the itchy palms. I'm not carrying my phone around with me, to lunch, and I'm constantly just glancing over it, and I'm just getting a sense of confidence, I guess, if you will, that of the trade. So as not to, not to like beat a dead horse, but the more data you have before a trade, the more confident you are with it. So with that being said, I just knocked over it. Oh my goodness. Theraflu, it's a wonderful thing. But going into the end of the day, I had my trades placed based on the information that was there. So why did I pick that information? I showed you that, but let's go back to why on the quant trading chart, where that information also came from. And let's get back to the dashboard. So there's a couple things to notice using the charts on the dashboard. You have the quant levels, which we kind of briefly just discussed on the Disney and now the Tesla with these levels. Now, when I said there's always more data, and every corner you look in the Quant Trading app, there's going to be more data. And you can spend a weekend, a week, even a month in one area, learn it all, and then turn a corner and there'll be more stuff. You think I'm saying that like overkill, but that was my my experience. So with that, the quant levels is what we just saw on SPY and Qs, because there's so much action on there that there's an ability to have more data with more levels, and with that comes more angles and more abilities to make different decisions. Now today is not a perfect day to show how these levels interact, but I do have a quick slideshow And I know it likens back to like high school or college when someone's like, I have a quick presentation, and it's like, oh, and you just feel the pain in your stomach. But this is like 5 slides. But what you'll notice is that there's more levels, right? So you'll have levels of the volume range, the previous volume range, call blocks, call volumes, previous call volumes. These are all, not to get into every single one of them, but these are all levels that should be respected and treated just like regular traditional support and resistance lines. But these aren't, you're not seeing these on your charts like the Weeble thing that I have up here. And I just realized that I wasn't showing you the thing. Hold on a second. Sorry. Screen main. Screen left. There you go. Oh my goodness. Oh, why is it still attached to the web? Oh my God. You see it glitching, right? It's not me. Oh my gosh. So, okay, new plan. Why won't this disappear? Wow. Ah. So the idea, right, as I go in to fix this, the idea is that we try to use as many data points as we can with as many levels. And with Quant, you'll have more levels than you'll need at first to trade with. And then once you get used to using all these levels that you don't see on this chart right here, on this traditional chart, you'll realize that there's a hidden information. You know, it's like the Matrix, sort of like you're seeing one thing and you're believing it your whole entire life. And then when I got introduced to the quantitative method, it was like, how did I ever trade without it? And sometimes it felt like cheating, but it's not, because the markets are for those that are patient or something. But I'm going to try and fix this right now, because I can't believe everything I'm clicking on is just not, it's not responding, which is amazing. I can't even turn my face off. That's how unlucky you guys all are. Hang on, I got an idea. We're going to shut it all down. Aha! Got you, MFer. So this is the old vol chart for the Qs. And this is the levels that I was talking about. You'll have the previous put volume, you have previous call volume. Just to get into one or a couple real quick, is that I'll make this bigger here. The volume range, right? When I first started hosting and everything, everyone would be like, hey, what's the ranges for the day, Doc? And when I first took over hosting, I would say, okay, let's find the ranges for the day. And normally what you do is you look for the overnight lows, the overnight highs. If that doesn't give you information, you look for the previous day. And I would just mark off, this is, again, a terrible example, because just the way the market is right now, it's not normal. But like right here, this would be overnight low, that would be a range. Obviously, that was broken on that terrific day. Terrific, because I've been looking for a bearish action. That's how I made my ranges. Now, with the volume ranges, what that is it really just measures sentiment. The volume range is where the action was yesterday. That's where everyone was interested in. That's where everyone had their calls and puts, and that's where the main action was. So that can now be your new range. So that was one of them. That's the blue ones, the blue lines, the volume range and the previous volume range. And here's a little secret. It's not really secret, but it's just something that I found out a little late to the game. But I noticed these lines here. What these are is actually just, with lack of a better term, it's like looking into the future. It's not 100% pretty much, but this is the guesstimation of where the next day ranges will be. So you can kind of, as the day goes on, you can kind of see where they are. And then tomorrow you'll have new ranges, obviously. And I like to go flip back and forth, because even though this has more data, obviously here you can see the absolute GEX, and you can have the max pain, which is right here, the white one. And you could find areas. So you have multiple things around 409, 410 to 411. This whole area should be respected. And then when you see the line here, it's all dashed and dotted because it has multiple values in it. So this one was respected hardcore today, and even part of the volume range yesterday. So this was hard to break today because it had all those confirmations in it, all this confluence right around 410. And we hung out above it. And I flipped back and forth to the quant chart because it's less information, but it's also a little bit different. And in a discussion with Bryant, I was bringing up a point where I could show this to, my friend's son or my friend's daughter, who's 12 years old, and just say, okay, listen, when you trade, you want to, if these lines bounce off this line here, and you have a nice bounce twice, and you should expect it to go to the next line. And when this line breaks, if it comes back and tests it, you should go to that line. And it's to dumb it down to that. It's almost like it does it an injustice, but it really helped me kind of wrap my head around it, because as complicated as the quantitative method is, visualization of it is just price action. It's just following the bouncing ball, right? And on that point, I'll bring up the little demonstration that I created. And this goes to the fact that the point where Brian, keep in mind, let's back up for a second. The creator of Quant Trading App, Bryant, who I'm sure you've all seen his Trading Lit on YouTube, he created this for himself. And in essence, because he was waking up 4 o'clock in the morning, like we always used to, right? We all here, maybe still do. Try to crunch through some data, look for, what's going to be going where throughout the day. Just trying to get a hold on all this data. So when he created this, it simplified all that and then just presented it to him so that he was able to take a glance at something and then go back to what he wanted to do. And in his case, he is passionate about film, and now he's able to, chase down that dream and not completely be obsessed with staring at lines. Well, even though I still believe that he is, he probably looks at it in his sleep, just like all of us probably on here do. But the idea is that you want to be able to take a glance at something and see, okay, yesterday we held this line of the intraday. Depending on where we open and where we gap up or gap down overnight, this was going to be an area where I'm going to be interested in. And you'll see that here when I pull up the little demonstration. I had that ready to go. It's here. But I'm going to take a pause for a second. If anyone has any questions, then I'll go down through them here. Here's 1, here's 2, here's 3. All right, they're slowly loading up here. Mr. Webb, do you chart solar to Bryant using all the GEX levels? I'm trying to decipher. I'm sure solar is a typo. Similar. Do I chart similar to Bryant using? I believe that everyone charts differently, and I would never want to say that I'm like anyone else. But yeah, I got the GEX part. hexagonal levels, not a thing yet. But I would have to defer to him. And if you have any questions on the way he charts, I would reach out and get some time with him. And maybe I'm glad you got a good sense of humor, Mr. Webb, and maybe ask him directly, because I can kind of see where that question's going, and or maybe I don't know. But I guess the answer is no. I think everyone charts differently, and when I learned, like I spent a year with one person, I spent a year, I guess almost like an apprentice kind of or internship-esque role, and I've learned to, how they chart, right? And I learned how to chart when I was with a previous person in a group, and I've kind of melded all that to make it my own. And I think that's really my vision on how everyone should trade. All independent traders should accept all data inputs and then digest it all and then make it your own. And if you're going to follow someone on how they trade, make sure you can break it down and understand why they're doing it. Maybe at first, okay, I'll follow it, and then, but really you want to break it down and understand why they do it. Yeah, definitely. Having your own style is paramount, I think. And I know people that, from the last position I was in, that they would sign on in the morning, ask what the trade of the day was, and if I was hosting and that person wasn't there to give that trade, that's it. They wouldn't know what to do for the rest of the day, and that really kind of broke my heart. You really, to have someone dependent on someone else for your own finances, it's extremely. I mean, obviously there's financial advisors that you pay to have them to deal with your finances. That's one thing, but the goal, and I think the vision, especially that I identify with Bryant, is, and that's what kind of drew each of us to. I get, wow, what am I talking about? What we can identify with is that the vision is a non-guru type situation. Like, Bryant has developed amazing tools, but he's a user of those tools, and he does post his trades because in his thinking it's, hey, I'm doing these trades anyway. Why not share what I'm doing, and then have everyone see how I use it, and then in turn that could be a learning process rather than a follow me, this is how to make money process. It's a use this in order to make money process. So without further ado, this is Tesla, right? And let's just make it bigger here. This was on September 20th, 2023. Hold on, I like how he shows those levels Monday morning and plots based off of Quant app using those GEX levels. Didn't know if you see it the same way. Oh yeah. Before you get into this, that's a really good point. What Bryant does is, like I was saying, he posts, like, I'm going to trade this. Why not post it anyway? And if you just drop down to option spreads, and especially when you're first starting, this is a great area to kind of, you kind of want to live here. If you're into spreads, or even if you're not, if you want to just learn it, the amount of detail that Bryant shows in what he does is amazing. And here's VARC. Everyone's sharing their own. This is option spreads. There's also income spreads. This is purely Bryant's plays, and he breaks it down. I mean, specifics, man, specifics. 39, DT, SPX, Iron Condor is stuck around -6% for a few days now as IV has increased, which isn't good. I'm planning to continue holding as I'm looking for a closer to 10% return on the margin. You can't, I have never seen anyone else describe their own trades in specifics with exactly what they're thinking, and it's not biased. It's not like, I can see a lot of people that, cover their tracks and they blow off a losing trade as an, excuse, and the data was wrong, Fridays, the data doesn't make any sense, blah, blah. You could see Brian is, oh my, if a trade goes wrong, he'll let you know why it went wrong, what he's going to change for the next time. And even today, we had a great, quick discussion in Gold Chat about discipline and self-awareness. He realized that something was off, and this is, blah, blah, blah. I'm not going to get into exactly what specifics of his trading style. You can go for it, look for it yourself. But he volunteers that information where other groups, you wouldn't really see that. So that is a good point to bring up, Mr. Webb. Thank you for that. And when other people, they start posting their options, you can actually, respond, ask questions. So if you're not into spreads yet, this is the place you want to hang out with. And this is Option Strat. This is one of the more popular ones, or I think it's the only one that people really use on here. But getting back to the demonstration, this is exactly how to use the what happened to the original one? Is that the original one? Oh my God. Okay. Yeah, this is it. So September 20th, 2023, and this getting back to a tool that you use for time saving ability. You have to really forgive my vocabulary is just not there today. So looking at this, we have a double bounce off the 2-day VWAP, and there was prior to this, there was a trade that we followed up to this point, and I think someone was saying, "Oh, that's good, Doc, really good that you showed us how you did that trade, but what about going forward? It's always good hindsight 2020." So this is where I started documenting the trade going forward. So here we have the midpoint that I was telling you about earlier. This is to be respected, and it's also what I've learned is it's not an exact touch and go. It's more like a you know how you put two magnets together and they're the same polar sides, and you try to push them together and they kind of bounce off each other without touching. Anyway, poor analogy, but that's kind of like the midpoint, especially here in this particular instance. So this whole area between the intraday and the midpoint now becomes an area of resistance. And just tracking it back, this also was a gap fill. So as we ran up, I closed that position. Now on the new trade, we're going to be buying puts. The midpoint is going to be our stop loss, right? So any put we have, if we go above this line, it cuts out automatically. When we have our targets, the old 2-day VWAP, as you know, that's my favorite line. That's going to be our first target. That's target number 1. Target number 2 is if we go beyond this line, it's going to be this confluence right here. This is super strong. You have the max pain, dotted blue line. You have the green buy zone, and you have the bottom of the intraday. That's a triple confluence. Tricon, if you will. Don't remember that. Forget that. Forget I said that. So we're going to buy puts here. Target 1, target 2. Let's see how it plays out. Hey, guess what? In case you missed it, this is the second slide of that. So this is going forward in time. We bounced below that, and now we have target 1 at the 2-day VWAP. This is a profit-taking area. You can take all profit, or you can take some profit for possible further down. If not, you're covered. You already made your profit there. How are we going forward? Target 2 gets matched, and not just matched, but a clear bounce off of that. So this, I almost said tricon again. I don't want that to become a thing. This triple confluence level is becoming solid. Now, you could even go further with this and keep trading it, because now we kind of have this nice double bounce off the buy zone, right? I don't think I follow this any longer. Oh, this was the this is the initial trade. This is what sparked that whole thing. You buy at the buy zone, and you follow it up. You double bounce off the 2-day VWAP. That's confirmation to go higher, and then finally the pop right into this resistance. That's where you sell. So this was the original, almost like the prequel to what we just went through. So I mean that, I know that was old. That's over 3 months now old, and I keep it just because it was when I was in the hospital. I was trading in the hospital, and I love trading in the hospital because every time a nurse comes in or a doctor, they always, "What are you doing? You're working? Oh my God, how could you be working in the hospital? Oh, what are you doing? What do you say? Oh, okay." And they get interested in it. I digress. But the idea is, in the hospital, everyone thinks you just lie in your bed and you watch TV all day. But when I'm in the hospital, I have doctors in my room and nurses and constant just people in there, and you have no time to yourself. And if I was able to get that trade off and document it at the same time, it was one of the greatest examples of it. So that's why I keep it and keep showing it, essentially. But let's jump back to the present here and see where we're going to be going, actually into the end of the year, and see if the GEX and the quantitative method, the Quant Trading App specifically, can help us try and determine where we're going to finish out this year. And as we kind of touched on at the beginning of this broadcast, quiet, numbskulls, I'm broadcasting. Or you Three Stooges fans out there, which is probably none. But the idea is that we are thinking that, again, the markets have been completely on fire for I would say the entire year, but more specifically, the last, me shut off all this noise. I know all those lines are a lot, but every line means something. It sounds kind of trite, but it's true. So let's just recap, right? Right here. The low of the year is the first trading session, or at least the first trading week of January. The high of the year is most likely going to be the last trading session, or at least now it's official, the last trading week. So officially, the first trading week is the low of the year, and the last trading week is the high of the year, right? Correct me if I'm wrong. We started here, we opened at 255 in the Qs, and now we're at 411 on the day. So at any time, any point in time in the year, if you invested and you held on, you were up. You were up. So you want to hold it into the new year so that you can write it off as 2024 and then worry about the taxes in 2025. If everyone is thinking that way, then January should be a major sell-off, right? And this was a topic discussed in gold, and a theory solidified and brought up by Bryant, is that he expects it to keep running. And in January, we have a massive correction or a gentle pullback. So the idea of now 2024, and you'll hear it on all the talking heads, it's going to be a soft landing. It's going to be a recession. It's going to be a soft recession. It's going to be a recession landing. Whatever the case is, this cannot continue, right? We've seen what happened when we have overextension before, right? We had the pandemic, and we thought, okay, that's it. The markets, everyone here was panicking. That's it. The market, we're going to go to zero. And then all of a sudden, there's a flip on it saying, wait a minute, we can still function. Everything's going to be fine. Let's put our money back in. That's why you have the sharpest V bottom I've ever seen. It's not like I've been trading that long, but I mean, there was a big gap for me. I was in Morgan Stanley right out of school. I joined electronic publishing right underneath the analysts, the guys that make millions of dollars, the guys that put up those estimates on the earnings that you want to sometimes wring your necks about. But then I took a break and I came back to it right around the pandemic when everyone else does. Because as an insurance agent, I was going into people's homes, sitting down and discussing their Medicare options. When the pandemic hit, no one wanted them in their homes. The secondary part of it is their demographic for Medicare is 65 and older. It's the demographic that wasn't really latching on to doing Zoom calls just yet. So there was an idle time, just like everybody else. So the small firm I was with, the agents, we got into investing just like everyone else. But we banded together and we hit it hard, and we were learning. Some people were taking classes from this person. Some people were taking courses here, blah, 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 and we were all convening back. But this V bottom, I can't imagine seeing anything like this again. This sharp decline followed by not just a rebound, but an overextension that lasted, let's see, right here, from March 2020 all the way up to right about the end of 2021. And then the correction started. So right from 400 all the way down to 250. Now, this past year, 250, right back up to 411. So we had this nice cup, handle, and here we go, like this. See old cup and handle right there. And if anyone here, I don't think anyone here was in my other earlier broadcasts, but we were watching this form. We had a cup, we had a handle, and we were expecting it to come up, or we were expecting it to fail. It came up. Now, cup and handle, you should see, in a normal sense, a little more of a explosion there. But we are in a unique situation that this is not your regular stock. This is the Qs. This is an ETF. So we should see a correction because this is insane. I'm on the weekly right now. So this is 1, 2, 3, 4. This is almost a dozen weeks of pure green. Something's got to give. 2, something's got to give. 3. Anyway, so when you go to the daily, right here, November, bang. December, bang. January, coming down. Let's find out if we can examine with the GEX data, if we can pinpoint what's going to happen in these last few days. And I know it's even with the data, it's not going to be 100% because anything can happen. People are going to want to start selling before the sell-off, because the sell-off is planned. People are going to start taking profits in January. It's going to happen. So I'm weary about placing any type of action until I start seeing the action and when it happens. But let's just see. Let's see what it is. So back to the Qs again. I'm holding personally. I don't like sharing what I had, but I already mentioned it so much. I have what 412.78 calls for the end of the week. This 417 we were watching all day was rising and rising and rising. Now I think the last hit was I noticed was above 30, but now I guess it's right a little below 30,000. The ABS, the absolute GEX, is rising. It's chasing the spot price. I would not be surprised, right? And this is just from my experience. Don't take this as 100%. But what I'm noticing is that when I notice and I follow the rising GEX strikes, that the ABS, the absolute GEX, will shift, and it's probably someone's that been using QTA for 2 years. They're gonna be like, well, duh, that's the idea that how it happens. But this is how I'm learning it, and so that's how I regurgitate it back. The ABS should be climbing up, and I wouldn't be surprised if it just pops. If it pops and matches this high GEX, this absolute GEX, and this high GEX, if this becomes a confluent level, we should see the price action gravitate toward it. Whether it hits it or not, it's up. It's literally in open air, because if you look at the chart, let's pull the chart back up again, right? The chart is now in open air. And I always said, even at the beginning of this broadcast, quiet numbskulls, I'm broadcasting. Even at the beginning of this, I was saying you always use the traditional charts, or at least I always use the traditional charts to match up the GEX data and the quant data. But now we have none. This is all pioneer country. This is going out west on the Oregon Trail, right? We have no idea where we're going. We are the map makers. We are the dreamers of dreams. We are in new territory, brand new, untouched by human hands. So we can go to 417 fine, because there's literally nothing in our way. Normally, and this likens back to a popular person that taught me a lot about stocks. He would call this THTH, which stands for too hot to handle, or too high, too hard, whatever, which literally translates to don't trade this because we don't know where it's going. In this particular instance, there is that date. There is that January 1st date that everyone's kind of waiting for to sell. So, and it's not that I'm saying that this is a manipulated situation, but it's everyone together is behind this whole waiting for January 1st thing to finally close that position. So with that being said, it's very likely, in my eyes, that we see a continuation, and there is no obstruction. But the only thing that could put a damper on trading into the sunset, trading into Times Square ball drop for all-time high. We're already at all-time high. The only thing that could happen is that people will start to say, you know what? I don't want to come back on Monday or Tuesday. I don't want to come back on Tuesday and see an immediate sell-off and then have to try and close my position on the tails of everyone else. That the banks are going to figure it out. They use dark pools and they use everything else. Oh, by the way, recently added to QTA is dark pool levels. Dark pool levels. And by the way, you can import that right onto your, I'm trying to pull up the, let's just cut this down. I kind of breezed right over that. Apologize. So when you want to import the levels, you can use Thinkorswim or you can use TradingView. You just go right here. By the way, weekly and intraday. Weekly is available at 5:30 p.m. on Sundays. You just click here, you copy it into your Pine script, and you're ready to go. The intraday is around 8:30 a.m. every day. You copy it, and you're ready to go. New for everyone is the dark pool script. Dark pool scripts, right? And if you're not familiar with dark pools, essentially what it is that you have big banks, or you have whales, or whatever you want to call them, people that are trading tons of shares in order to get the price they want. If they put it out in the open market, it would throw the market into chaos, and they wouldn't get the price they wanted. If they put it into an area where you could see it coming down the pipe, you see that orders in there. They use dark pool levels that's off the regular charts that you don't see on level 2s. And that way they get the price that they want. But now with, dark pool information, we can see it. Right? Those in itself become support and resistance. And just to use this example here, you can see it here, right? This dark pool level, bang, resistance. Came back up again. Didn't like it, got drawn back to it. This, to me, is a very good addition. And this is another point on to keep in mind with QTA. It's going to be constantly improving. The development team is expanding. There's so many plans in play that Brian has told me. I'm not going to release or discuss any of them here, but there's a very exciting things coming. So stay tuned. But I mean, this was meant to be a little short introduction. I'm sorry I got a little carried away because it is a very exciting time. The next 2 days, we only have Thursday and Friday left, and then it's going to be a brand new year. So if I can leave you with this, when you first sign on to QTA, go do some back testing, right? Back testing using any types of data here. You just go through the candle stats. I mean, I could spend an hour on every clickable thing that's on here, and it still wouldn't cover everything that you need to be. Like the candle stats, you just hover over and it tells you everything. You can make daily candles, weekly, monthly. Oh, the date range. Oh, it's immeasurable. And then it lists it here on the chart. So if you're a data person, I think D Capital, we were talking earlier, you really like that crunchy data. Well, this you're gonna need. You might have to see a dentist after this. This is super crunchy data. Terrible joke. But to get into this, it's immersive. It really is. And I can't really say enough about it. But just click down here and get familiar with it. Take the weekend to really get into it and back test. I mean, it goes back, like I said, Disney went back to 2018. I think the SPY goes back to 2017. And mostly everything goes back to 2020. And just keep in mind, anything prior to 2020 is going to be a lot different types of data. What we got? Do you ever use the advanced GEX feature when trading? Oh, absolutely. And if so, what do you think about it? Yeah, let's cover that real quick. Thank you for that. And Mike, dark pool levels is great. Yeah, Mike. What's up, Mike? What's going on, man? So, advanced GEX. So what we were talking about before with the feed, let's just remind everyone what the feed is. The feed over here, what we talked about, Tesla, the Russell, the Apple, Amazon. This is every 15 minutes you get these charts. With the advanced GEX, which is located right under options, you go to advanced GEX, you can generate your own chart, your own report. And what I mean by that is you can put in the information you want. So over here, let's go on to, everyone loves the Tesla, right? Love-hate relationship. So we're going to plug in Tesla, and this is going to be good because we're going to see different data, right? So right here, included expirations. You can select all these different expirations. It goes all the way up to 2026. We're going to uncheck them all. And first, let's see. We had all of them. Let's see what we have here. This is all the data. Give me all the data. You got it. This is all the data. So we have some high strikes right around where the price is right now. Still leaning to the upside. That 300, a lot of interest towards that 300. Everyone wants that journey to 300 for Tesla. But if we just focus on the last week, it would have been cool if it was 2 weeks ago, we would have a little more expiration. But let's just focus. There's one expiration. Excuse me. So we're going to just focus down to one expiration. Here we are. It's all centralized right around the 262 mark. 2 weeks ago, when we did this advanced GEX, the spot price was a little further down. Now we've reached to the highest GEX there is. Now, this is a little tidbit. Where do we go from here, right? If you had a connector, and what I mean by a connector is if you had another high GEX strike, which was at this level, I would say, okay, it'd be easy to understand why we would generate or gravitate from 262 right to 264. The issue is if I include the first 2 weeks of January, we're going to get conflicting data. So let me uncheck this and now see what everyone's going to be interested in the first 2 weeks of the new year. And I'm going to get into actually how to use these and how to plot them. And in fact, to do that real quick, I'm going to open my TV. Not my TV, my trading view. So let's slide down and see where the first 2 weeks, okay, first 2 weeks, people see a lot higher. That road to 300, everyone likes it. But now we have a little more negative GEX. So we have and then when you hover over it, it gives you all the information you want. Absolute GEX, the GEX is negative 2 million. The call open interest is almost 6,000, and so forth and so forth. As this increases, you're going to see fluctuations. The absolute GEX will jump around. It will find a new home. With this, if the absolute GEX, if we start gravitating up and people start, there's more open interest over here, the absolute GEX will jump. And if this gets attached to this 270, I'd be a player for that 270 call. And let me see if my TV is ready to go. I'm going to pull up Tesla. And I'm going to show you, Mr. Webb, how I use the so this is my trading view for Tesla, and you'll notice that I have positive GEX, I have a purple line and negative GEX here. This information is all from advanced GEX, all from up here. This table gives us information of where important levels are. So you have the purple dot, that's your absolute GEX. And then you have down here, you have the most open interest, also with the most put open interest. And then to find the most call open interest, all the way up here, kind of by itself. This is interesting to me because you have the most put open interest at the same level as the most open interest. And if we slide over, this is the gamma, this is the flip. And the most negative GEX. This is a nice confluent level right here. So this to me would be an attraction and support of 240. And we notice that on the chart, 240, it shows here in visualization. So to capitalize on that visualization, if I had a play for the first 2 weeks, and I do actually, I actually have Tesla puts on for the 12th. But not to get into what I have, what I would do if I was plotting it, and I just lost the trading view. Get back there. Hey, you're there, you're there. So I have put up a template on myself. So let's say this level right here. Let's just start with, oh, you know what? Let's start with the absolute GEX, the purple line, right? That's at 260. Let's pretend I'm just doing this for the first time. I'll get array. I'll find 260. Go to settings, and I've already created my templates, which are gone. Oh, you know why? Because I'm using regular array. I don't need that array. I need the everyone loves Raymond array. Horizontal array. Hey, horizontal array. How you been? So I have made templates for all of these. And what am I looking for? Absolute GEX right here. It's already purple. And now it's there on my chart. Negative GEX. So now all these things are on my chart. All I have to do, let's see if I can do it like this. Do it like this. I got myself a story. All right. So we're going to just match up negative GEX. Negative GEX is here. I want to move that to 240. Oh, it's already at 240. Someone's been here before. This is an old absolute. I'll delete that. And you get the idea. Most open interest is also at 240. Pull it up here. Put array. Get into settings. What was I saying? Most open interest. And you get the idea, and you just go out and you plot it. And this, and you know, Brian was saying, you know, if you take, I don't know, what would this take to do? 15 minutes, right? to plot this out. Now you have your own generated, individualized report based on your trades, based on what you have in your positions. Now on your chart, you have the levels that you want, specific to you, right? You can import the levels every day and every week, but then you can also generate your own. So this is what I'm talking about, is if you just, the more time you spend with QTA, the more information and the more individualized data you can find. And we've just, touched upon the tip of the iceberg, if you will, on it. We haven't even gotten into the upcoming expirations and so much other stuff. But the basics of it is, if you're just getting started, you want to go to Thinkorswim. There's an installation guide here. It's a slideshow. It takes literally under 2 minutes. If you know how to copy a script, copy and paste a script, you're good to go. If you don't, it tells you step by step what to do. Click the studies button, then you click edit, and you delete the garbage that's in there already. You paste in the new stuff. It saves the file, and you add it to the chart, and bam, you have your everything good to go. If there's any issues, oh no, what do we do then? You go to Gold Chat. You say, hey, what's up, bros and gals? I got an issue. Anyone have any blah, blah, blah? Okay, no issue. All right, go and click QTA support. The idea is that there's so much support here. There's a community of people using the same exact tools you are, and they're using it differently. That's the key, right? You can what's a good analogy without sounding like a crazy person? Someone, okay, Spalding, right? He didn't invent the baseball, but he standardized it so that everyone now has the same tool to be using playing the game of baseball. He was not the best hitter. I think he was actually a pitcher, but he wasn't even the best pitcher. So people have used what he's created in different ways. And back then there was no there was no a certain split finger fastball. Maybe there was, but anyway, my point is that it's evolved, but it's using the same tool. So the idea of a community around a tool like this is more important than anything, because the way I use Gex and Advanced Gex and the Quant charts might be completely different than the way Mr. Webb uses it, or how Mike would use it, or Jeff. Everyone will use it differently, and then share how they do it, and everybody wins. Hopefully. With practice and discipline. I mean, the support is there. The data is there. The community is there. And you really, I mean, the stuff that's coming down the pipe, it's only going to get better from here. So really think about how your year went in 2023. And I know some people in here that have tried a lot of different things. And I've been down that road. I've tried so many different programs. And whether I was reviewing them or working with them for something to come out of it, whatever it is, I've experienced most of what or at least the top crust, the upper crust of what is offered out there. So analyze what you've done before today. And if you're happy with that and you're getting consistent gains and you're having confidence in your trades, this is the most important part. It's not about just making money, right? It's really about having confidence in that money. You don't want to place a trade and not get any sleep overnight, That's a risk level thing. The idea is that try something, get yourself set up for success. Try a tool that's proven, to me at least, and everyone in the community, everyone that I've met that has joined is still there, right? I've become friends with everyone that joins. I have not heard from anyone that has joined that has left. Put it that way, I'm not trying to make this as a testimonial or anything, but I'm just trying to notice in my head how many people actually use it or keep using it, right? So consistency is key. Trust in the data. leave your emotions for betting on the Giants game, right? We're not here to bet. We're not here to hope it goes up. We want levels. We want structure like this, like we're looking at here on the trading view right now. We know this absolute, look at this. It's been broke and tested. Where we're going to go next, I don't know if this level is actually matched up to the absolute GEX that we just looked at, but if this was looked up and researched, I would imagine we're going to go to 269. Again, I want to iterate. I don't know about this level. This might be from a previous one, but that's all it is. This is levels and data. So ask yourself that, right? And if you're not happy with what you've experienced so far up to this point, try something new for 2024. I mean, you guys, you people that know me, know that I'm always open and always willing to help and assist in any way I can. And I'm planning on doing things like this, like what we're doing right now. I'm planning on doing at least, once a week, maybe once every other week, maybe more if it's needed. So reach out to me if you have any specific questions. I'll help you make a decision whether it's right for you or whether it's not. And use that link. I think I posted it up here. I'll repost it. And oh yeah, by the way, thanks for coming through, guys. And if you could hit the like button. I see, we have several, maybe about a dozen people came in on views. I'm not really sure, but do me a favor, hit the like button. It does a lot for the for YouTube to know that I'm not just spinning my wheels here. And consider hitting subscribe, because we don't do this. I don't do this all the time, but when I do, it's kind of a little bit of improv. And if you feel like coming by, you get notified about it. So I really want to thank you guys for coming, and I hope everyone had a Merry Christmas, Happy Hanukkah, Happy Holidays. And we got 2 more days left of the year, and I'm expecting some volatility. So be careful. Make sure you hedge. Always have an insurance on your play. Don't get overpiled on one end, and be safe. And thanks a lot. And leave a comment below. And if you have anything, reach out. My email's at the top there, or it's not anymore, but it's doc@oneononestocks.com. And yeah, if you need any lessons or anything like that, that website will be going for the new year. And yeah, thanks a lot, and I'll see you guys around in the room. All right. Oh yeah, I'll see you next year. Oh, peace.